Good morning, Dornbush download number 30.
Probably number 30.
Probably a bit early for a midlife crisis. That's probably 40 when we have had Dornbush download crisis. But anyway, good morning, good afternoon, good evening.
Maybe we can talk Margot into it when we're doing a midlife crisis.
We'll get Margot from Livestrong Life Insurance. She's very keen to be on here, aren't you, Margot? We'll let Margot know, the big head shake. No, seriously, good morning, good afternoon, good evening, whenever you're watching this. That's one of the good things about these videos. You can watch it whenever suits you. So, look, we're at a profit reporting season now, but still a little bit going on. One thing that we're pretty busy with at the moment is notes, Dan. We're doing a bit on the notes front.
They're pretty constant, Andrew, aren't they? The notes, the capital raisings are coming through. It's really interesting, isn't it? The capital raising, and then also seeing companies being taken over. So it's a real juggle from the companies at the moment.
Oh, there's plenty of corporate activity taking place. There's those Crown notes at the moment. Plenty of interest in Crown.
Good rate.
4% above BBSW, bank bill swap rate, so that's about 6.32% at the moment. And yeah, look, plenty of interest. We do have a smidge left, so if you are interested, they're not like fixed interest. You can't compare them to fixed interest, but you know, in the context of, as long as you don't think Crown will blow up, and I mean,
it's a good cash cow, isn't it?
The chances of a gambling company going bad is pretty remote. Then certainly for clients who are trying to generate a better income stream within their portfolio, it's probably something you should be having a chat to one of your Dornbush advisors about. And last week,
a little bit of volatility risk.
Smidge. I mean, they generally, the Crown notes won, I think, about 105, 104, 105, $100 notes. They go for initially 6 years, and then they can be redeemed in 2040 and allegedly go out to 2060 or something. But anyway, the long and the short of it is, if you're trying to drive better income, worth looking at. We've just done some ANZ and also some NAB. So there's certainly plenty going on in that space, and they're all linked to interest rates, which of course, you know, we have a decision on next week with the RBA. Not next week, right? The week after. 1 week ahead of myself.
You're 1 week ahead of yourself.
So
and that'll be the day back from work after Easter.
So what are you thinking? What are your thoughts?
I don't think they'll change yet, Andrew. I don't think the last one's had enough time to flow through the system.
It's a good point, because they generally take sort of 12 to 18 months to work through the system.
Yeah, and that'll be 2 months, won't it? So.
But they do them in pairs.
True.
So my gut feeling is, if it isn't in April, it will definitely be in May. And then we think there'll probably be another one in August. So coming back to those Crown notes as an example, so 6.32% at the moment. That means that if, you know, we're right in May, you know, goes back to 6 and, you know, goes back to 5.75. But that also means your term deposits, which you might be getting, say, 3% on at the moment, you'll be lucky to get 2.5% by mid-year. Some interesting times.
It's a lot of hurt there, isn't there? One that I was just looking at the other day was Sun PEs, which happened about 6 months ago. I'm not too sure, paying around 4.7, but they were under the $100, so perhaps they're worth having a look at.
So some Suncorp notes, Suncorp PEs. All right, have a look at those. What are you buying at the moment, Dan?
Really looking at AGL again, Andrew. It's one that I've forgotten about for a long time. All this gas from Santos and Origins going into those liquid natural gas plants, isn't it? And the customers, the gas customers, are going to want it, and AGL's really perfectly placed for that. In saying that, though, 2/3 of their income comes from electricity and only 1/3 from gas. Okay. PE's 15 times, which is, you know, not too bad, but there's a lot of companies a lot higher than that.
Oh, absolutely. Yep.
Yield about 4.3%.
That's all right.
Yeah, not too bad. 100% franked, and also getting into that renewable energy as well.
Which is obviously a growing space. Putting my Chamber of Commerce hat on for a moment, having meetings with both, you know, New Hope Coal and also renewable companies, and they all agree that over the next 10 years, 15 years, that there will be a pivot towards these renewables. Not at the moment, it's not efficient enough from a cost point of view, but, you know, looking over the horizon, they can certainly see that sort of, you know, that shift, that change. I've been buying. Thank you for asking. I've been buying. I've been buying one called FSA, and the code surprisingly is FSA. Freddie, Sam, Andrew, and it's Fox Symes. So for those of you who sort of watch mid-time TV, Days of Our Lives or whatever, and these ads about debt consolidation, that's Fox Symes. That's these guys. So you've racked up a credit card and you've racked up a home loan, and it's all getting too hard. They'll actually take the loan over, bundle it all up, spread the payments out for you to sort of basically help it get it back under control. They've got over 50% market share. The PE's not demanding at 10 times, so you're talking AGL at 15.
Yeah.
These guys are at 10, looking at earnings growth next year of 12 and the year after that at 16.
Andrew, are they the ones trying to massage good customers out of these people, like people that are having a bit of trouble but generally in a pretty good space, and then trying to on-sell business to them after that as well?
Yeah, and you're right, they're looking at home loans and all that type of stuff. And you're right, a lot of these loans that people took out at the time, they were credit worthy.
Yes.
And,
Mum got pregnant or dad lost a job.
Or there was a marriage bust up, or for whatever reason, things went to custard. But there still is a strong heartbeat there. They just need to get through whatever the mess they're in at the moment. And these guys are making great money. So certainly that's one. Anything that you've been selling?
Oh, not really, Andrew. I think it's just a market that, waiting to see where it goes, it just seems to be getting stronger and stronger, doesn't it?
Oh, and again, I think that as they keep dropping rates, the impetus to be holding cash or the need to be holding cash is a lot less.
Yeah.
One, not that we have many clients in it, but, for clients holding TPG, the telecommunications people, I've been suggesting that they should be selling that. I think that if they have to start overpaying for IINet, that's going to be a problem.
There's a bit of a kickback there now, isn't there? So.
And the P is 31, so that's pretty high. Earnings are only 27 times growth. I mean, 27 is really good, but you're always looking, and we've spoken about this a couple of times, you're looking for a PE that's less than an earnings per share growth. So back to FSA, I said the PE was 10, earnings growth of 12. In the case of TPG, it's inverted. So you'd want to at least see the PE fall back to where that earnings per share growth number's at. Anything else you want to cover off on?
I think that's pretty good.
I think we're pretty right. Till next week. Thank you.
Ciao.